Joining me to talk about it, Taylor Riggs, co-host of The Big Money Show right here on Fox Business, and John Carney, Breitbart economics and finance editor and co-author of Breitbart Business Digest. Welcome back, kids. So I know the Fed, we can go on endlessly. Did they, would they, were they, rates going up, rates going. The Fed is a Rorschach test. You can see into it whatever you want. That's been my line for the last 48 hours, maybe 48 years. I just want to say one thing, though. Taylor, I appeal to your senses. You've been in this business. I mean, you've worked for different. I mean, profits are the mother's milk of stocks. And I just want to say, now, maybe this last rally was prompted by what Jay Powell said yesterday. I can't imagine why, because no one knows what he really said. The fact, though, I was consulting Ed Yardeni's newsletter. He's a very smart guy, as we know. Profit margins are at a 16-month high. Forward earnings are at a record high, according to Mr. Yardeni, up 11.2% right now over the next year. That'll do it. I mean, profits are booming. I think profits are the backbone of the whole economy. But I do believe that there's mother's milk of stocks. So I'm just adding that because people say how, when, why, and it's not all about the Fed.
It is not. So I think people are relieved that the Fed still signaled 3 cuts instead of 2, though, as we were talking about earlier, the median dot plot was only 1 vote away from doing 2 rate cuts instead of 3. So you could argue that maybe the market took too much reading into what the Fed had to say. I agree with you. It is all about profits. And I do think AI has structurally changed the game. We talk about what changed this year. Where is the Godot recession? Where is the Godot pullback, the correction, the bear market? I think you could argue it's not coming because NVIDIA at the beginning of this week has continued to wow us and change the game structurally. They're delivering chips that are $30,000 to $40,000, and people are lining up to get them. That's the difference.
I think it's big stuff. John, you know, maybe in 30 words or less, you can tell me what the Fed said yesterday. More rates, fewer rates. I mean, I don't think the Fed should cut rates at all this year, all right, or maybe not until after the election's over. There's no evidence of it now. Actually, the last 2-3 months, inflation rates have been higher. So what did he say, and is that having an impact on this record stock market?
It is, because what the Fed said is they expect more growth, but they also said they stand ready to cut. So what they did is reintroduce the idea of the Fed put. If the economy does well, stocks should do well because profits will be there. If the economy starts to sink, the Fed is ready to cut, so stocks will do well. So basically, the market goes up. That's what Powell did yesterday. That's what we saw in the market yesterday. That's what we're seeing today.
I think I understood that. I'm not sure. I think I understood what you just said, the Fed put. That's the old Greenspan.
Absolutely. Basically, the economy looks very strong right now. The Fed increased its expectation for GDP growth from 1.4% to 2.1%. So they said, we think the economy is going to be strong. But if the economy weakens, they'll just come in and start cutting right away. So there's no real downside. The Fed took away the downside risk in the market, and so stocks are going to keep going up.
All right, so I'll repeat. I mentioned this yesterday with Steve Moore and Art Laffer. Things that the Fed should think about, because the inflation story is not that great the last few months. I'm not saying it's the 1970s all over again. I'm just saying it's going wrong direction. The so-called super core, what is that? The core services excluding housing, rent. All right, that's gone up almost 7% at an annual rate for the last 3 months. CRB index of commodities plus 12% since November. Brent crude up 19% to $86 since December. Gasoline prices up 12%, $3.52. That's not $5, but it isn't below $3 either. Actually, the inflation, the 2-year inflation break evens in the tips market up almost 80 basis points year to date, closing in on 280. And the price of gold since October up 20% from 1820 to 2180. Now, when I was a much younger man practicing this on Wall Street for the now defunct but still great company called Bear Stearns, I would have used these price indicators as warnings that inflation is not dead.
And you could correct me on this, John, but what I think Powell tried to do yesterday is say he doesn't look at any single given data point, and any 1 or 2 month isn't it. It's more of that longer term trend, which is why they didn't believe inflation when it was coming down at the end of last year, and they're not really going to believe inflation when it was starting to trend up in January or February. They're trying to make sure that they can look at the long term trend. I think Mohamed El-Erian also, formerly at Allianz, now since I think moved on.
He's a professor now.
Thank you. He moved. That's where he moved on to, John.
That's what happens to you, man.
It goes,
You
Larry.
get one forecast wrong, you're out of here. And you're teaching school someplace.
But I think what he said.
I want to just say, for the record, I know he's a good guy. I know him. He's a good guy. Little tiny left of center, but mostly a straight shooter. I just want to say that.
And I think what he was saying is this was a Federal Reserve that was willing to sacrifice inflation to make sure the economy is okay. That if inflation runs a little hot, it is okay.
That's right. One of the things that kind of made no sense of what the Fed did is they increased their estimate for growth, increased their estimate for inflation, did not change where rates were going to go this year. I will say, if you look a little deeper, they changed next year. They're not coming down as much.
Yeah.
The year after that, they're not coming down as much. And the thing that really surprised me, but the market has completely ignored, they changed the long-term forecast. That went up from 2.5% for the Fed funds rate to 2.6%. Tiny little move, but the first time it's happened in 4 years.
So I happen to agree with you, and I think your attention to detail is right. So from your Breitbart Digest, Bidenflation, Fed sees interest rates staying higher for longer to fight inflation. I happen to think you're right. And in fact, I really think secretly Jay Powell is not going to cut rates this year. Anyway, before the election. On the other hand, Nick Petraeus of the Wall Street Journal, who covers the beat, he's a very smart guy. He was saying how the Fed was dovish. And I was reading the word dovish from a lot of people. I don't think they was that. He's keeping the 2% target. Wasn't that where the rubber meets the road? All the lefties wanted him to go to 3% so we can hurry up and cut rates and juice the economy to bail out Joe Biden. I don't see him doing that.
I don't think so. I think that would be a shame for them to come out and change a long-term inflation target. I think most economists, you two would know better than I would, have reiterated that 2% in the long run is where you want inflation generally to be.
Well, and what they did is they kept the long-run inflation target the same, and they moved the long-run Fed funds rate. That's going to keep moving. They're going to keep moving that up because what they're communicating there is that it takes slightly higher rates than they used to believe to get down to 2%. So this is actually a hawkish message.
By the way, I want to add on, maybe I should have put this in my riff. You wipe out gas-powered cars and stick EVs in, that is inflationary.
Yes.
You got nothing but higher prices for everything across the board.
Think of what a lot of people have been noticing, that auto insurance is way up. The more EVs you get, the higher auto insurance comes out because EVs are very expensive to repair once you get in a wreck. And so you're going to see that auto insurance number keep climbing. I'm told by people in the auto insurance that that's been one of the drivers of why auto insurance inflation is so high, because it's so much more expensive to repair a car today than it was 10 years ago.
Very good point. Anyway, I'll say this, as long as profits stay high, stocks should do okay. Profits start coming down, you're in deep yogurt. John Carney, Taylor Riggs. Folks, be sure to catch Taylor with her co-hosts Brian Brenberg and Jackie DeAngelis. The Big Money Show every day, 1 p.m. Eastern, right here on Fox Biz. Thank you very much.